Now we're going to get into some trading strategies. Brian Caprice from Keep Trading Simple is going to talk about how to trade these markets around economic reports. This is very useful for both gold and oil markets. As I mentioned at the very top of the day, there's a reason why we chose gold and oil. Oil markets, as the economy starts heating up again, oil is a supply and demand driven product. When demand goes up, if everyone starts hitting economic recovery and people start doing more business and the economies globally start heating up, you'll see demand for oil go up. And that, demand can drive up price unless there's supply to meet that demand. So oil, very much supply demand driven. And so around economic reports on how the economies are performing, as well as where oil inventory levels are, things that impact the price of oil. And also in an economic recovery, everyone's talking about inflation, interest rates. Gold is a proxy for those markets. And Brian's going to cover that. And then Chris Vecchio from Daily FX will also cover some of that as well when he does the fundamentals of the markets. So with that, Brian, I am going to...
You need to share.
I'm going to turn it over to you. Give me a second. We're going to change presenter.
I'm waiting for the countdown. I'm like, wait, this is different than we normally do.
Yeah, I know. We have talked. We did chat. Brian and I do a market update every morning, live stream on YouTube, 8:45 a.m. Eastern, 7:45 a.m. Central. Please join us. You'll catch live analysis on what potential hotspots might be in the markets, and you'll find that on the YouTube channel, which is why I say subscribe to the Nadex YouTube channel and also pay attention. We do those live streams every morning, and you can also watch the recordings all day long in case you miss it and you couldn't tune in. So with that, I would like to turn it over to Mr. Brian Caprice from Keep Trading Simple. Brian, let's talk about trading around economic reports.
Yeah, and I'll just add in, guys, we have a fun time in the morning. We do end up talking about gold and oil a lot because it has been in the news a lot lately with everything that's been going on. We try to cover everything and just kind of grab the hottest, but gold and oil has definitely been something that's been kind of dominating. So today's presentation for me is going to be basically trading gold and oil markets around specific economic events. So if you guys have ever heard me speak before in the past, I am very big into news trading. The reason why is sitting in front of a computer. I mean, everybody thinks trading is this glamorous life. It's great. It's fast. There's, cars. And that's not really what trading's about. Trading is definitely about, putting in the hours, getting the screen time, solid money management, having the correct, and I'll say asset, but having the correct vehicle to kind of get you where your trades need to go. I'm very, very big into using technology, and obviously I have a lot of different things going on with different webinars, teaching students. I take care of my daughter during the day, coach my son. So there's a lot of stuff going on. And the reason why I like news trading is because typically, markets are not moving 24 hours a day. Just because they are open doesn't mean that there's going to be good movement on a regular basis every single day, right? I try to maximize my time that I have in front of the computer, and that's why I really focus on a few small things. I say small, and like I said, the name of my company is Keep Trading Simple. I try to keep it as simple as possible. So it doesn't matter if you've been doing this for 25 years, 40 years, 50 years, or you're brand new at this. My goal when I do these is to give you something that is actionable. When I talked to Todd beforehand, and I wanted to get kind of an idea of the audience that we are dealing with today, he said, it's a big group. There's going to be a lot of questions, and he said, a good chunk of them are new people to this. So if you guys have not signed up for a demo, please go get a demo. And I don't know if Todd can put a link in there or not for it, but please have a demo. I would really, if you guys have never placed a trade on Nadex or you're brand new at this, I would like to give you something actionable today that you can go in and either place your first demo trade tonight or tomorrow afternoon, or tomorrow morning, actually at 10:30, is the oil inventory report, is one of the biggest reports for oil. I would like you to take your first demo trade. It doesn't cost you anything to get it. It's not a real trade. It's a paper trade, but it'll give you that first step to start becoming a trader. Okay. So, I mean, if everybody can write it down, hold your hand up right now and say, I promise I will take a demo trade tomorrow, that would be hugely beneficial, because again, I do these presentations because I want you guys to get something out of them. Too many people trading will just sit there and watch these and be like, oh, that was great. And I'm like, have you ever placed a trade? They're like, nope. I'm like, well, why not? You've been following me for 2 years. What's wrong with you? Again, you guys got to get out there. It's got to be actionable. So I'm going to try to give you something actionable today that you can put in practice tomorrow. And I'd like to hear back from Todd that, all these people took these demo trades yesterday. This is great, because that's why I do these presentations. All right, so before we dive in, let me cover quick disclaimers. They're kind of the same. One of them is for my company. One of them is for Nadex. But again, these are pretty standard. You guys have heard these before. No representation is being made that the use of this strategy or any system or trading methodology will generate profits. Past performance is not necessarily indicative of future results. Only risk capital that only risk capital should be used to trade. You guys have heard that. I'm not going to go through the rest. And then again, here's the Nadex one that I will read because I want you guys to understand it. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions you make are solely your responsibility and at your own risk. Again, past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and what we're talking about today, commodity futures, particularly for gold and oil. Now, Nadex is a registered trademark of the IG Group. With that said, you guys have, you guys kind of get that. You've heard that before. Again, that's why I'm asking you guys to go in there, and I'm going to give you something actionable. If you have not done this, please go do it in demo first. Build your confidence. Make sure you understand the platform. I was scrolling through the questions, and actually, Todd, I actually answered one question. Somebody had mentioned or made a comment about, the Aussie dollar dropping 323 pips. It only dropped 32.3, not 323, but I answered one of them for you guys. What I want to cover, and again, these are all important factors, right? We need to talk about global recovery first because a lot of the oil reports and future oil movement is based off of how we are recovering from the pandemic. Number two is oil demand / inventory. Okay, there's been a major shift in the last couple of years. And again, like I said in the beginning, I don't want to spend 18 hours a day watching the same chart waiting for the setup. I want to make sure that I am there at the highest probability time where I expect movement. Like I need that catalyst. Let me get in there when it's going to be the biggest amount of movement. A lot of that has to do with the demand and the inventory reports. Then we're going to talk about gold inflation. Now, gold inflation. I mean, it's 5 o'clock somewhere, right? Is the saying? Gold inflation is one of the things that's very, very difficult. Gold is unlike any commodity in the world. 99% of what people know about gold is actually wrong, but perception is reality in the trading realm. And I'll show that to you guys. We are getting ready to enter a cycle, though, where we're going to see basically major catalysts for gold, right? Inflation is one of them. And again, depending on who you believe in or listen to, and again, all data is kind of skewed at some point or another. One side is saying, oh, yeah, we want to see Powell is saying, I want to see a moderate increase for, an extended period of time. He didn't really tell us what moderate means, but I can show you what the government mandated and where they want inflation to be. And then we can extrapolate what moderate is. And then we can see the other side of the coin where we have experts out there that are saying it's 3 times as high. And even Mr. Warren Buffett last week was saying that we are seeing substantial inflation. And again, Warren is not aligned with a political party. He's not in the government. Warren is in the business of making money. So he's one of those guys, when he says something, it typically holds water. Okay. Last but not least, here's your actionable item. We're going to go over basically how you can find when the best opportunities exist. But then we're going to cover which Nadex product you should be using, right? I mean, when I first started, doing things with Nadex a few years ago, it was binary or call spread, right? Now we have binary, call spread, and knockout, right? There's 3 options there, but which one do you use? I mean, it's confusing. They're all a little bit different. There's benefits, there's pros, there's cons for each of them. I'm going to give you guys 3 actionable ways that you can trade both oil and gold. And then I'll kind of go over the product and talk about which ones I feel on a, and again, this is not set in stone. It could be any given day and also depend on where price is, right? For which product you should use. Because like I said, if you're new to this and you're like, I don't understand this 0 or 100, it's right or it's wrong. Call spread, it can go here, but then this other one over here stops me out. Like, I don't know, there's a lot of stuff. How do I know what I'm doing here? I want to make sure I give you guys something that you can go home, take and do it tomorrow. And like I said, you guys all promised to raise your hand. I saw it. I threw, the reverse camera osmosis. I saw you guys all raise your hand and say that I'll take a demo trade on oil tomorrow. Okay. And we're going to cover that. So let's go into the global recovery. Now, this is not a new chart. Some of you may have seen this. I've actually used this slide before, but I think it's very important because, again, a lot of projections based off of OPEC and our government and things like that. These were the growth projections by the International Monetary Fund in June 2020. Kind of like when we were, I don't want to say peak because the numbers obviously now are much worse, but I would say the peak fear, right, would have been June of last year. Now, on the economy, as far as what they expected, where we saw things, particularly I want you guys to look on the right-hand side, right? We're talking about advanced economies recovering 4.8% in GDP this year, and emerging markets were supposed to recover 5.9. They may say, well, what does this have to do with gold and oil? Understand, oil is probably the most supply and demand driven, asset that exists out there. These were the projections. These are the numbers and figures that OPEC are using. And you may look at this and be like, wow, none of these are even remotely close to being right. Because again, these are forecasts. Okay, these are forecasts. I want you to pay particular attention to two categories, both the 2021s, but both for advanced as well as emerging. Now, I don't know if you guys watch the news or if you're kind of, I don't know if you have like news wear out or hangover, whatever they call it, right? If we look at third world countries right now or developing nations, right? How are they doing with the pandemic? Like if you're not in the elite top 5, right, advanced economies, how are they doing with the pandemic? Not well, right? So do you think that they're going to have 5.9% GDP growth next year or this year? Probably not, right? But this is what a lot of the data was based off of. Now, here is kind of the breakdown of the individual areas. And again, some of these are right, some of these are wrong, right? It comes from the same exact report. And again, the United States right now, they're saying we're doing better than was expected. And yeah, I would have to say right now, we're seeing that, and that's great. But there are other areas in the world besides the United States, one of them being the European Union. And there's one of them in here, really the driving force behind the European Union. And again, it's an industrial powerhouse. Look at Germany. Germany's supposed to be increasing 5.4% for this year. You say, why is that important? Well, guess what? They like to drive in Europe as well, right? They are a very big, consumer, right? There's not many oil companies and oil producers in the European Union, right? But there's a lot of users, right? Well, it's expected, and again, I don't know if you guys can see this or not, but 5.4% growth in 2021. Okay. Here was our most recent German preliminary GDP quarter over quarter, and it's minus 1.5%. Does that look like it's going to be on par to be up, around 5% this year? Answer is no. Okay, and you look at their January 2021, they were up 0.1. Then they are down minus 0.5. Does it look even remotely close to where it should be? No. Now again, how does this affect us with oil? Well, when you have somebody as big as the European Union having extremely disappointing numbers, that lowers global demand. Okay. Now, what does global demand have to do with it? There's a lot of different things, right? OPEC, producers, they did cutbacks. There's all kinds of things like that. But global demand, global recovery is not where they expected it to be, okay? Now, here are the oil inventory reports, particularly, and again, there's a couple of them here, but I want to go through these oil inventory reports because these are where we see how the, quote, experts are fine-tuning how much oil is being produced, how much is being pumped, how much we're taking out of tankers, how much needs to be brought in from overseas, and how much we're sending overseas. Okay, the first one is the API, the American Petroleum Institute. Okay, API comes out Tuesday night. It's not considered the end-all, be-all. It's one of two big readings. Now, it is an industry group. Basically, it's basically oil companies, right? They're a group. They all get in the same room together and like, all right, this is what the estimates are going to be. So. It comes out Tuesday night, kind of gives us a foreshadow. The EIA, again, this is the #1 tradable oil inventory report that you can deal with. Now, EIA stands for Energy Information. It's an independent, impartial organization. It collects and analyzes, and again, it's to promote sound policymaking, efficient markets, and public understanding of energy and the interaction with the economy and environment. Here's where it's important. Read the last line. The EIA requires major oil companies to complete their oil inventory surveys and includes a stern disclosure for non-compliance or intentional wrongdoing, and there's civil penalties for failure to file accurate and timely data. So between the two, one of them is the industry group, and the other one is independent that will fine people for doing things that are, inaccurate and intentionally wrong, right? So EIA, these come out on Wednesdays, okay? When I was talking about catalyst early on, these are the ones that you should be targeting. Now, it's very easy to figure out when these are because they're every single week. every single week at 10:30 Eastern Standard Time on Wednesdays, except the following times. And now these are holidays, right? There are holidays, or they're Monday or Tuesday. They typically get bumped back, but for the most part, I mean, minus the Friday, the Fridays in January, it will just typically get back one day, and it's at 11 o'clock. Now, reason I'm telling you this is actionable. If you want to become an oil trader, you have to know when these reports are coming out. As I mentioned, the EIA are the most important, Wednesdays at 10:30, but except for the following days that are listed on the slide, you could go in, and again, you could do it right now. You could screenshot this if you want, do whatever you want with it. You could set yourself an alarm for 10 o'clock every single Wednesday minus these, and say, hey, listen, I need to get to the computer right now because there's going to be an oil inventory report in 30 minutes. I know that there's a catalyst out there. I need to make the most of my time and go. Okay. And again, it's the biggest mover. Okay. Now, as far as oil inventory reports go, there are two organizations. It's really one organization and an offshoot that you also need to be aware of. Okay. Because when they speak or when they meet, they also are a catalyst for major market movement. Okay. OPEC. I believe everybody out there has probably heard of OPEC. OPEC started, I didn't realize it started back in 1960, but it was created by the original members, Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. Okay. It is now morphed, and there are obviously other people in there, but there is something recently that we've seen. And again, they have actually this year probably done the most price manipulation. So again, oil inventory in the United States is important, but there are other bodies that also are catalysts, and they are also showing up on an economic calendar. In particular, is this OPEC JMMC. Okay. Now, this is basically representatives from OPEC as well as 11 other oil-rich nations. Okay. There is one particular nation that tends to drive a lot of the, I guess, talk there right now, which would be Russia. Okay. If you guys are unfamiliar with what oil was doing, oil earlier this year with everything going on, and last year with the pandemic and everything else, I mean, oil was back down in like, in kind of like that, in the 40 range, right? And there's a lot of talk about where it's going to be, can it stabilize? And they started, changing the production, and it went back up in the 50s. Now we're up in like the low 60s, the 60 to 65 range. And really, what they did was this group, right? This OPEC group said, we are going to reduce production because if we lower supply, that will meet the demand that's out there, and we will have price stability. Okay. Now, as a trader, right, I really don't care what the production is. I want the markets to move. I don't care if oil's at $40. I don't care if it's $65, nor should you. Okay. What I do care is their movement. If it goes up, great. If it goes down, great. If it stands still, I don't really care. Okay. As a trader, the fundamentals don't necessarily matter. Now I look at them. Now I will say, and again, this is a little asterisk, OPEC 20 years ago used to have a lot of power because they were the main producer. Okay. If they had done some type of oil production cut years ago, they literally would have had everybody dangling on a carrot where they wanted the oil price to go. Right. Now there are many nations out there that are producing oil. Okay. You guys have heard things, about greed and what happens and all that kind of stuff. OPEC got very, very greedy. They had, oil at $100 a barrel, and they were making money hand over fist. And, it was rough, right? I mean, I know many people don't like $3.50 gas, $4 gas, but that's what they were doing. So because of that, again, there was major demand for oil, and they were reducing the supply to make the prices high so they could make a lot of money. What happened is many other countries started producing oil. Okay. So with that being said, these are now, and again, this is 2019. It's actually gotten a little bit crazier, but you can see the top 10 producers in 2019 of oil, right? Millions of barrels per day. Guess who's sitting at the top? Okay. The United States. Okay. OPEC countries still do produce a lot, but there are many other players in the game now. Okay. Something interesting that I actually just saw from Reuters just a couple of hours ago was talking about how India, right? India is a very large country, guys. A lot of people in India, they reported this year that they purchased 11% less oil from Middle Eastern countries from OPEC, and all that 11% rolled over and came from the United States. Okay, so there's been a little bit of a shift. Okay, so understand that it's a very, I don't know, not difficult, but oil is a very speculative, very controlled, very, for lack of a better word, it's a manipulated market. Okay, it's not for the faint at heart. It's not your, your grandfather's, IBM stock, right? It's not even like one of the, the quote safe ETFs, right? And I say quote because again, there's plenty of risk in those as well. Okay, but this is why there's a lot of kind of banter back and forth, and this is why again the EIA reports are important. But again, OPEC, Russia, they are controlling global supply as well. Even China, to some extent, owns. They produce a little bit, but China's demand for oil is really what's driving it. So again, do you have to go crazy into the macroeconomics of this? Absolutely not. What you need to know is look at the EIA reports. You could use the API reports. And again, I'll tell you why. You may be curious. Why am I telling you about APF? I just told you it's not important. There is a reason why API is important, and I'll show it to you in a sec. But you want to do API, Digen. She's jumping behind me. If you guys can hear thumping. EIA, which is the Wednesdays at 10:30. You need to look on the economic calendar for any OPEC or OPEC plus type news releases or meetings or anything like that. Okay. So with that said, producers and consumers. All right. Another aspect of this, and again, this is a little bit of fundamental, but at the same time, it's not, right? There are other news releases out there that are not based off of, oil, right? There are things like CPI, which is more inflation. There are things like unemployment numbers. There are things like non-farm payrolls out there. All of those large, major economic news releases, okay, they also matter for oil because think about it this way. If you remember last year in the pandemic, the unemployment numbers were absolutely atrocious. People are getting laid off left and right. Services, everything was closing down. If you're not going to work, guess what? You don't need gasoline for your car. Okay. There's a whole lot less that is needed. Now, has that changed? Will the demand ever go back up to where it used to be? Maybe, maybe not. My personal opinion is no, it won't. Many more companies are doing things remotely. People are always going to keep driving, but there are more people that will be staying home and doing remote work now than we've ever seen. Okay. Above and beyond that, other things that you need to think about as far as oil goes is we currently have an administration right now that is pro-oil or anti-oil, right? The environment is very big to this administration. They are trying to come up and put bigger taxes on gasoline and oil and cars and driving. They are very anti. So at the same time, if the president is speaking and, say he's speaking to the environmental board of so-and-so, guess what? That's probably also going to impact oil. Okay, so now we have regular weekly economic news releases. We have, OPEC and OPEC plus type meetings. We have a presidential administration that is also kind of more the kind of other route, right? That are also involved in the decision. And again, every one of those news releases is the opportunity for you guys to get in there and trade. And again, if you guys don't know how to find economic news releases, you can use Daily FX, right? You go to, I think it's the third tab, fourth tab. You can go right down to there. I use Forex Factory for a lot of stuff because I do a lot of currency trading as well. So there are many different ways out there to find an economic news calendar for these high impact news releases. But at the end of the day, if it deals with the economy, it affects oil. If it deals with inventory, it affects oil. If it deals with OPEC and global demand and recovery, it affects oil. Okay, so that is why the oil market is as strong and really as powerful as it is. Okay, now, when do you trade this? So this is kind of the secret sauce here, as I mentioned. Okay, I told you where the calendars are. Okay, there's a couple other things. Now, session open, you may not understand what the sessions are. Okay, and I think if I go one forward, yeah. So if you look at the bottom here, this did come from Forex Factory. At the bottom, you'll see that when we're talking about global sessions, okay, this is just kind of, I took this picture at 4:38 p.m. Eastern Standard Time, and you can see kind of where the line is, right? When our market closes, the Australian or Sydney market is opening, right? Then the Japanese market opens, right? The Asian session opens. And then at about 3 o'clock in the morning, the London session opens, right? And then we have the New York session. When you look at this, it's very easy to figure out that it really comes down to two sessions. Okay, the Asian session, like the Tokyo and the Sydney session, kind of get wrapped into one. They're not as big of a market mover because oil is not as big in demand with those economies. Typically, the UK session, again, the London session, or the New York session tend to be the drivers. Okay, they tend to be the drivers. Let me flip back over so it makes sense. And here's my funny picture. This is basically what it is as far as oil traders go. Is London going to control it or US? And again, why am I telling you this? Why have the funny picture, two rams butting heads? because again, you got to either grab one or the other. Okay, let me flip over real quick. Oh, hold on, I was going to sneeze in, and I don't want to sneeze in your thing here. So here's two perfect examples, and actually, let me mark these off real quick for you. Here is the European session a couple days ago on the 3rd, right? Yesterday. We had a little bit of movement at the European session, and there was no real news, nothing that was earth-shattering. And by the time we got to the red arrow, which is the US session, price had pulled back. So not really a big mover, right? Then all of a sudden, we had 9 o'clock Monday morning, US trader steps in and boom, off to the races. This was a move of approximately $1.62. Now, you may say, why is $1.60? Okay, it's $1.62. What does that mean for me? Well, when we talk about the products at the end, we're going to talk about something called strike widths. Okay, $1.62. Okay, even on the daily for binaries is 4 strike price difference, or basically 4 strike prices apart. Okay, that's why it's important. So had you taken a daily contract here for the European session, nothing would have happened at the end. You're at the exact same spot. Had you taken it here, you had less premium. You went 4 strike prices in an hour, basically in 2 hours. Okay, could you have used the 2 hour? Yeah, you could have. And then the 2 hour strike differential is only what, 20 cents? It's 20 cents right now. Whoops. Yeah, it's 20 cents. Okay, so again, we moved what, 8 strike prices higher? Again, that's how you start doing risk reward, and I'll cover that at the end. Unlike today, here was the European session. This blue line here was the European session. So what did we have today? Today we had a move of $1.50. And then since that time, this is what we've done. Here's the US session coming online right, basically right here. And we're right here right now. So it did pull down a little bit and then pulled back up, and we're in the exact same spot. So you see how it's kind of a battle. There'll be days where the European session does nothing and the US session is amazing. And then here's the Asian session. And then there'll be days that the European session is amazing and then the US session does nothing. Okay, so this is how you can take advantage of those opportunities. And that's why this is important. Okay, I will say over the last 5 or 6 months of the 2 sessions, the London session has tended to be more of the controlling of the 2 Rams. You know, that's not a fixed law. That will change back and forth yet. You know, the idea is get in there and find the right contracts for it. Now, pre-release is the second one. So if you have a problem, and again, if you want to become a master at just the oil inventory report, and again, this is the one that everybody raised their hand and said, hey, listen, I'm going to show you the oil inventory report. Oil inventory reports on Wednesday can be big movers, except, and again, this is the except number, except if the European session was the one that moved it. I would love to say that nobody knows these numbers ahead of time. But again, you can see right now over here on the right, the actual versus the forecast. They get it right about once a year, right? Maybe twice a year they get it right. I'm not sure who the forecasters are, and it's different from site to site. But I mean, some of these, like if you look at March 3rd, 2021, the forecast was that the inventory would be down 1.3 million barrels, and we had a surplus of 21.6 million. Little bit off, right? So what you can do is when you're playing, if you're not going to play the session strategy, and again, you know what? Let me go back 1 second. Session open, of these 3 when to trade, if you're going to be a session open trader, you can limit your day to about, I don't know, your trading day to about 30 minutes to an hour. You know exactly when the European session is opening, right? So you could wake up early if you wanted to, or if you're a West Coaster or in Europe, you could just stay up a little bit late. You could trade that, put your trade on at the European session. Or you can say, hey, listen, it didn't move. Most likely it's going to move in the US session. I'm going to trade it at 8:30, 9 o'clock this morning. That's how you trade the session open. Strategy number 2 is the pre-release, okay? The pre-release, this is what we talked about. It requires some technical analysis, and it's to be combined with other strategies, right? I am a big supply and demand person. I'm not a support and resistance. There's a difference between the two, but you can use other things as well, okay? You can use Fibonacci if you like Fibonacci. I have a couple of students, they call it the golden setup, where we have a supply and demand. We have a supply or demand zone, as well as a 50% retracement inside of, a Fibonacci retracement curve, right? The concept behind this and why I like it and why I believe that it works so well is what happens is price will typically drive into a level, right, beforehand, okay? It'll make it either cheaper or more expensive before the news release comes out. The reason why is there's most likely somebody that knows what that's going to be. And yes, that's absolutely legal, but it happens all the time in the market, okay? What happens, and think of it this way, right? When you go to a store, do you want to buy something that's more expensive or something that's cheaper, right? When you buy something, you want it to be on sale. So what you do is you'll see price drop down pre-market, like pre-release, only to get a cheaper price, so it goes up and goes skyrockets right through the right through the ceiling, right? And vice versa. You'll see price rallying up into a small zone, for me, a supplier demand zone, right? Supply up top. And then all of a sudden the news release comes out and it goes straight down. And you're like, wait, why did it do that? It was rallying beforehand. Why is it going down? Well, they were trying to get the price more expensive so people could sell it. The retail trader will look at it and say, hey, it's going up. Okay, I should buy this because it's, it's in an uptrend right now. No, it was going higher so they could get a more expensive price when they shorted it. So what you can do with pre-releasing is, and again, it takes a little bit more knowledge. I would say the session open is probably the easiest of the three. Not the easiest, but I would say pre-release is probably the most difficult of the three strategies that I'm giving you, okay? Again, knowing what the previous forecast was, you can combine it with knowing what API. No, the API, I totally forgot. I apologize, guys. The reason why I talked to you about the API release is because if there's going to be a European session move, it tends to follow and back up the API news release on Wednesday night, okay? The EIA could be completely different, but if all the movement has already happened in the European session, it really doesn't matter what the EIA release is. So API is more for the European session. The pre-release is more for, and again, you can do pre-release on either, but the pre-release is more for the EIA session on Wednesdays. And last but not least is playing the retracement. Now, when you have something like a expectation of a minus 1.3 and it comes in at 21.6 in the other direction, right? Or some of these other ones where you're expecting a 1.6 surplus and a minus 9.9, right? You tend to have a parabolic move. This is a strategy that I use. I talk about it when I'm working with Todd. I do on the Tuesday sessions as well. It's called a parabolic retracement. Okay. Every time there are masses, there is strong, sudden movement in one direction that comes from an emotional response. Okay. What is the emotional response? It is the news release, right? Holy crap! It's supposed to be minus. Inventories are supposed to be down, and there's a positive 21 million barrels. Oh my God, right? That is an emotional response in the market. They will be profit taking. People will see that. People will say, oh my God, it's up 4 candles. I got to buy it. Yeah, you're buying it from somebody else who's trying to sell it, getting out of their trade. And what happens is it tends to retrace back again. Okay. Of the three, the retracement, in my opinion, is the easiest. It does require a little bit more technical analysis, even more so than the pre-release or even the session open. And what happens is, the goal of this style, right? Really kind of not just a goal, but the thinking behind this is that price will be driven into an area of exhaustion, and then profit taking steps in. Okay. Institution, banks, professional traders, they understand eventually everything will stop, right? The goal is to get out before your profit is eaten away. And that's one of the mistakes that new traders or retail traders make all the time is they hold something. You're like, oh my God, I was making a ton of money. And then I walked away and I came back 2 hours later and it was all gone. Well, you've reached an area of exhaustion where profit taking was happening. And what happens in most cases, and you guys can see it over here. I'm not sure if you can see the blue dot or not on my screen, but there was a fast movement in price due to oil inventories. It ran into an area where we had previously seen sellers. And what did it do? Within an hour and a half, 2 hours, it had pushed right back exactly where we were before the oil release. Trade over. Okay. So again, there's one of these that takes advantage of session opens when big money comes in. There's one of these that takes advantage of pre-news market moves, expecting a miss. And again, we talked about misses, right? Whoops. We talked about misses. Do they happen frequently? Yeah, pretty much almost every time, right? Doesn't mean there's going to be movement, but again, here's your catalyst for making a big miss. And like I said, a 1.4 to 1.9 is not a big deal. But then you play the parabolic retracement afterwards, okay? Now, if you guys have never heard the parabolic retracement, if you guys want to learn more about the parabolic retracement, there is going to be a summit in June, which is, I believe it's going to be Forex based. I'm going to do the entire thing on parabolic retracements, how to play these. It doesn't matter if it's gold. It doesn't matter if it's oil. It doesn't matter if it's a currency. It doesn't matter if it's a stock indice. It doesn't matter. It's a emotional kind of gut check based trade, and how to take advantage of that is really what it is. So it's kind of like almost like market psychology as well. But those are the 3 ways to play oil. Okay. Now, before I dive into gold, let me just do a quick review, okay? Me personally, and again, the way that I love you guys, love to see you guys do it, is figure out which one of these work best for you. Maybe you have a full-time job, maybe you're off today or watching the recording. If you have one of those scenarios, again, maybe the session open is best. Maybe the pre-release, you're like, hey, I can jump on for 20 minutes. I know there's going to be the oil inventory report. It's going to be 10:30 every Wednesday. I can make time for that one. Maybe that's what you do. Maybe again, if you're a bit more conservative, maybe you wait to make sure that there is a move and then figure out how to take advantage of it afterwards. Because maybe there's not going to be a move every day and you want something that you don't have to be moving as fast, and maybe that's what's going to be best for you. It doesn't matter which one you do. You can master all three. You can master two. You can master just one. It's entirely up to you and your individual risk cycle. They're not that difficult to do. I know people will see this and be like, man, that was a lot to cover. I don't know how, again, I want you to go in tomorrow, figure out which one of these three you're going to try to trade tomorrow over in your demo accounts. If you don't have one, go get one signed up and try to take that step forward and make that trade tomorrow. Okay. And again, if you don't make money on it, oh well. If you make money on it, oh well, it's fake money. It's monopoly money. You can't buy anything with that. But get in there and start trying to see the price action, start trying to see yourself kind of, again, take that first step, make that first trade. That's the most important thing to this. All right. And then you'll figure out which one. And again, I'll go back and we'll talk to three products at the very, very end. Now, gold inflation is the other aspect of this. And again, gold and oil are very, very similar out there. They're both moving right now. And again, for the summit being gold and oil, they're both kind of in that same wheelhouse, same arena right now. They don't necessarily move together, but a lot of the things that matter in one matter in the other. They're both global economy products. The difference between the two is, think about it. When we put gas in our car and we drive somewhere, we use our gas. Okay. Gold is a little bit different, right? Gold is more a story of perception becomes reality. What I would say is, just like there is a oil inventory report, there is also news events for gold. The number one being consumer price index. And trust me, you may not know what CPI is or care. We experience CPI every single aspect of our life, right? It basically looks at the prices that you and I pay for consumer goods and services such as transportation, food, medical care. And what it does is it takes a basket, it figures out what the average price is and how it's adjusting over time, okay? Now, it's one of the most used statistics for identifying periods of inflation and deflation. We don't really have deflation in the United States. It's just basically inflation only here. And like I said, it's widely used across the board. There's no debating it. It covers, basically it covers professionals, self-employed, unemployed, people with low income. It covers more or less everything. Inflation is kind of what people, you hear inflation, people are like, oh, gold, right? But there's a couple things about gold that people misunderstand a lot of times. So understand that if people believe gold is going to go higher, it's going to go higher. It doesn't matter what the monetary policy is. It doesn't matter what the fundamentals are. There's no such thing as gold fundamentals. Throughout history, gold has been used as a way to preserve wealth / hedge against inflation. But if you look now back to, and again, there's a big analysis inside of this gold dilemma and everything. They look at like Roman soldiers because they can compare that to officers and things like that in the army right now. The value of gold hasn't changed in like 70 or like 200 years or something like that. It's crazy. But again, it basically protects your purchasing power. Okay, it protects your purchasing power. The thing about gold that is different is gold is not consumed. Okay. Somebody buys gold, you put it in a gold chain, put it in your drawer, gold doesn't disappear. You still have it. It's not like oil. It's not consumed. It's not one of those resources that is disappearing. There's people are still producing it and things like that, right? They're still digging it out of the ground. We haven't dug it all out yet, right? It's not one of those resources that we don't really use gold for anything that it gets destroyed, right? For the most part, all oil gets used and again, destroyed. Gold does not. So it's a little bit different, okay? But the fundamentals of gold don't necessarily matter as much. Right now, we are in an environment where inflation matters a lot. Okay, we have an extremely low interest rate. Everybody in the entire world does. We know the economy's cooking hot. We've been talking about it for 5 years. Right now, we're starting to see inflation. But again, where is all the inflation? If you guys look on the left over here, right now, all the inflation that we're seeing is basically sitting in food, which we understand. That makes sense with the pandemic. People are not working, things like that. Warehouses were shut down. But the rest of it is all in energy. Well, the energy inflation came from a little group with 4 letters called OPEC. Actually, OPEC plus, sorry. So again, why is this important? How can you make money off of it? Because at the end of the day, that's how everything boils back down to. Again, here's the gold inflation. It talks about it. We're seeing all items rose 2.6. Most of the inflation, again, this came out April 13th. Things have started to change a little bit since this originally got printed. And again, this comes from the U.S. Bureau of Labor and Statistics. The oil energy index has been risen 13.2%. Okay, knowing that a lot of the inflation is there, the inflation will tend to come back a little bit. Again, leading us maybe to additional shorts inside of oil. Okay. And again, what do you do with this? Not much right now, but I will say right now, we're seeing a lot of things out there. We're seeing speeches, just like with oil. CPI, again, is going to be like the quote oil inventory report. That is a big mover for gold. Federal funds rate, again, the overnight rate, all countries have it. The central bank determines it. That will also move gold around. FOMC statements, again, Fed Chair Powell speaking about, again, he's coming from, he's doing the FOMC statement, but doesn't have to necessarily be in, he's not the only person that contributes to it. But statements from, the FOMC, as well as him saying, we want to see a moderate inflation for an extended period of time. And, we see that all the inflation coming out is going to be transitory. But understand at the same time, we just had Warren Buffett the other day saying, I'm seeing substantial inflation out there right now, and we're starting to feel it. And other people have made comments about how we see real inflation anywhere between 4 and 6.8%. If the mandate for inflation is 2, and again, this is historically where they've been, what does that level of inflation bring us? Okay, I'll tell you right now, if you guys are looking for a big trade, this is the environment we're in right now. Extremely low, again, low interest rates. It makes it easy for people to borrow, easy to pay debt. Great, but the economy runs super hot. Once inflation comes and we start seeing inflation, they will start raising interest rates. And once inflation comes in, that's where gold starts going crazy. Okay. And again, it will also affect oil. So again, these are 4 releases that you can trade based off of inflation. You can see we're at 2%. And again, like I said, Warren's saying we're seeing significant. A couple people have said 4%, 6.8%. That would be a lot of inflation. Powell's not going to be able to hold that down forever. So again, gold is the same thing. Look for those 4 things. All right. Now let's talk products real quick here. Okay, because now I've told you when to trade them, how to trade them with the pre-release, the open, and the retracement. Binaries are great for session opens and pre-releases. Now, I personally like the 2-hour binaries the most. Okay, and here's the reason why. Okay, I'm looking at my Nadex I have multiple monitors. I'm looking at my Nadex products right now. Right now, because again, online the contract specs are different. I'm looking at what I could trade live right now. Okay, 2-hour oil binary options, the differential between one strike and the next is it's 20 cents. Okay. If I go down to the daily, again, which is a lot longer, right? They're up at 40 cents, which means they are double, right? I need double the movement in price to cover one strike. If I go to weekly, which again, it's great. I got the whole week to do this. It's $1 that it needs to move. Okay, and again, this is session open and pre-release. Why is this important? Well, what do we talk about this move right here? Okay, the move here from 3 o'clock in the morning and really up until 5 o'clock, right? That's where that would be the 2-hour binary right here, right? You're talking about $1.99. Okay, so if you look at your Nadex product, your 2-hour binaries, now I can't show it to you now because obviously it's much later, but that is 5 strike prices that it moved within 2 hours. If I'd used the daily from here, when it ended at 2 o'clock right here, it only moved, let's see, actually it would have been right here. Right now it only moved 98 cents. So it's still the same dollar, but the difference is instead of needing to move 20 cents per strike, it needed to move 40, so it only moved 2. Okay. The reason why I bring that up is because, again, when you're doing binaries, particularly at market open, right? At market open, or let me go back. I should put one at the end too. The session open or the pre-release, right? Which is right here, right? If I'm able to move 5 strike prices in that time, am I able, and again, if you guys are new to this, this is how it works. If you're at the money binary right now, the risk and reward is typically right around 50, right? The farther away from price you go, the farther out of the money, the lower the risk becomes because the price to get into it is also lower. So if I'm looking at something maybe 2-3 strike prices out on a 2-hour binary, to go long, I hypothetically may have, I don't know, $18 to $23 worth of risk. So if it does nothing, goes against me, I lose $23. Had I used an at-the-money contract, yeah, I have a higher percentage chance that is right because it doesn't really need to move, but I'm taking $50 to $55 risk and I can only make 40 in the other direction, okay? Risk to reward ratios are extremely important. And again, this is why I use news-based contracts, because I know there's going to be a lot of movement or potentially a lot of movement around specific times, and I can use smaller contracts to be able to get a better risk to reward ratio in those 2 hours. And then I can be done for the day. Okay, that's binaries. Again, biggest thing you need to remember is the 2 hour. I'm sure I get a million questions about this, but when we go next summit, when we go into the parabolic retracements, you guys will understand the binary options a lot more. Next is call spreads. So call spreads, again, this is a little bit different. There are shorter duration call spreads as well. Again, there are session open you can use them for. There's pre-release, and again, use those 2 hour short duration ones. Again, it could go against you, but again, you can use a little bit out of the money. A longer duration you can use for the retracement, because again, it may spike up very, very fast within like 2 hours, but then it may take a day to come all the way back to the retrace, the origin of the move. Okay, call spreads are a little bit trickier. The one thing about call spreads I want you to remember is you can take them off early. You don't have to hold them till expiration. Binaries you can take off early as well, but call spreads in particular, again, watch those areas of supply and demand for things to roll over. Okay. Another thing I want to mention about call spreads, again, make sure you get them close to the floor or the ceiling. I personally, not that you can't do it, but I don't like in the money call spreads. I like, especially session open or pre-release, if we're a little bit out of the money, I'm okay with that because I can get into something for a little bit cheaper, maybe like $18 worth of risk, but I can make 5, 6, 7, 8, 9, 10 times that if it goes out the other end and I close it early, right? So it all depends on how far out of the money it is. I actually use call spreads a lot, particularly the 2 hour. I find that the spreads are not as big as some of the binary ones. They may not require as much movement. Again, it depends on the day. So again, it's not fixed. It's not like binaries are better than and then call spreads. It really depends on the release and how much premium is stacked into the binaries. Okay. Last but not least is knockouts. Knockouts are a little bit trickier. Okay. I like knockouts for session opens because they tend not to be volatile. There tends to be, if there's going to be a reversal, it's small, right? Pre-release, you can use them, but they're not always the best because, again, sometimes the price will be whipsawing back and forth because of the pent-up nature of a news release, right? It could go all over the place. You can also use them for retracements. The pre-release is going to be the most volatile, and you're at most risk for the whipsaw back and forth, which will take you out of the knockout. So again, if I had to say, pick two, session open or retracement. Now, the nice thing about knockouts is they are much more in touch with current price. If price is moved in the overnight, it will take knockout contracts out and new ones will be printed. So it is always in more close proximity, not always, but it's typically in closer proximity than what call spreads are. And that's why you need to understand all three. All right. So if you are brand new at this, you've never taken a trade, my suggestion right now, if you guys are looking for kind of the ideal opportunity, if you guys love the idea of getting in there for a pre-release, right? Oh, I love this pre-release idea, or even a session open, because that's, European or US session open. I would say go over into the binary realm and try to find some out of the money binaries, 2 or 3 strike prices, higher or lower of where you feel price is going to move. And again, do it in demos so you get comfortable. If you guys want to trade the retracements, again, look over into the call spread or the knockout realm. And remember, don't make it too far away. There may not be a knockout. You could be in the middle of a bracket. But again, it's always about timing, okay? So of those 3, figure out which one meets your individual risk style. Figure out what you like, whether it be session open, pre-release, or retracement. Look at the oil inventory report numbers tonight. Look for the API number online. You can just search API oil, and you'll see what it is tonight. You may be able to find a European session move or an overnight move in oil. You may be able to take it tomorrow at oil inventory. Most important thing for you today, and again, this is your call to action, figure out one, figure it out right now, figure out which one you're going to play, whether it's going to be session open, pre-release, or retracement. Then I also want you to figure out which one you're going to try to play with a binary or a call spread or a knockout. Tonight at 6 o'clock, when the contracts open back up again, go in there and see if you can find what's the ideal one and sleep on it, and then take it tomorrow morning in demo. That way you guys can make sure that you guys are doing it in a safe environment until you got the concept. With that said, thank you for attending today, guys. I know it's very, very fast. Again, we went a little bit late because Todd and I were talking in the beginning. It's a lot of information. The most important thing you guys can do is get the chart time and experience in. Gold and oil is one of those things that tend to be a little bit more of advanced markets. It doesn't mean you can't start there. Nadex gives you a great platform to be able to have limited risk, basically the cost to enter, including the fee to get in. So you don't have to worry about things like a margin call or anything. And again, I'll leave you with this quote, and I love this quote. It's perfect. We simply attempt to be fearful when others are greedy. Again, that's the retracement. and greedy when others are fearful. Okay, and again, that's the pre-release move. Take it in the other direction. So, with that said, that's all I got for today, guys. Todd, if you want to take it back over, I can answer any questions that people have.
Thank you, Brian, so much. That was fantastic. Always educational, always informative, and always very helpful.